There have always been periods of volatility throughout the 145-year-ish stock market in the United States. And if you were to track back to the British stock market, you would notice the same thing, that there's periods of volatility. And so we've had a lot of price violence, a lot of price volatility in the last 7 trading days. I mean, really violent. Things that in some way have never been seen before. I mean, the type of intraday moves that have happened are, well, it's been impressive. But this is to be expected. This is what happens in any market, the real estate market, the stock market, the bond market, the currency market, the commodity market. I mean, there are periods of volatility in all of these markets. And if you read my email to my blog post last week, I talked about, or I started the blog post off with a Ray Dalio quote, which was basically, expect a 50 to 70% loss. And if you have a strategy that is expecting that, then you have a strategy that will expect it and know what to do. So in the last few days, I've had people who are not clients of mine, but know what I do. And they've asked me, like, what do I do? What should I do? I mean, what's going on? Like, what do you think I should do? And my answer back to all of them is the same. I said, well, what were you doing? What was your strategy 2 weeks ago? Like, what was your plan? And, every time they're like, they didn't have a plan. I mean, their plan is no plan, right? Everyone has a plan, whether it's a well thought out plan or not. So, this correction over the last 7 days has been the hardest for people who don't have a strategy, who don't have an approach, and who don't have an approach and a strategy that expects volatility. Now, market probability is that strategy. It eliminates a significant amount of the noise and the false signals. But I want to dig a little deeper into just what's happened and kind of how historic the move has been. And I have 3 price charts for you. One to put things, well, maybe all 3 of them are to put things into perspective, but I have 3 price charts that I want to show you to kind of put the move of the last 7 trading days into perspective. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is, I don't know. I don't know what to do. And if you were thinking, I don't know what to do, then you may want to start thinking, maybe I should get a strategy that does know what to do. So the first price chart I want to look at is the S&P 500. And this is a price chart that starts from the beginning of March of this year and goes to the close of Friday. So we're looking at 6 months of the S&P. And if you look at this, what's really interesting is it basically stayed in a very tight channel. The bottom of it was about 2,041. The top of it was about 2,141, right? So it was in a pretty tight 100-point-ish channel, which is pretty tight for the S&P 500. And then it absolutely collapsed to the downside. And this is a strategy that represents an index that represents trillions of dollars. These are massive moves. This move down right here is a loss of about $2 trillion in market cap in the S&P. That is significant. I mean, the 4 black bars is a loss of 10 percentage points over 4 days. That's pretty amazing. And then you have this move up that's 6.5% over 3 days. So when we are in yellow light zone or yellow mode zone or cautionary zone, you have a lot of instability. The market has a lot of instability, and that's what we're seeing right now is a lot of instability. I do not know if this correction or this instability is over. It certainly has not gone into green light mode yet, but we are still in an unstable situation. And until we leave yellow light mode, we stay in that kind of that instability. But this has been an impressive move. Now, this line right down here that I show you, that was the low in October of last year, which ended a 10% correction. So in some ways, this gave us our 10% correction. If you add in the high, actually the high back in May, we're looking at a 12% correction. So, pretty impressive that we've had this in such a short period of time. And it could be that the shortness of it could make up for kind of the violent nature of it. But it absolutely has been a very violent 7 days, both to the up and downside. And that's going to happen every once in a while. That is part of every asset class, every index on the planet. This is what happens. Now, to put this a little bit in perspective, here is a price chart of the S&P 500. And each bar you look at, instead of it being 1 day and looking at 6 months, we're looking at 3 years of data. And each one of those little bars you see, whether it's filled in with black or it's kind of like a bubble with white, each one of those represents 1 week. Now, as you can see, the most recent one, these are called Japanese candlesticks, has a long tail down where it hit its old low in October of last year. And so we still don't know yet. There's still time. There's no rush to get in. There's no rush to get in. There's no rush to get out. Follow your strategy. Let market probability tell you and give you the signal. And I find sometimes to step back and look at a weekly chart really gives perspective. Like, okay, this is a weekly chart. Let me look at the last 3 years. Yes, the last 7 days has been crazy, but there's a lot of 7-day crazy periods over the last 100 years, and this has been one of them. Now, my last chart that I want to put in perspective, and this is really interesting to me, this kind of tells us how much or how violent the move has been. So let me describe what you're looking at. What you're looking at is the percentage that the volatility index, the VIX, has moved above its 10-day moving average. So a VIX is a way to measure the price movement of the stock market. And when the VIX is low, there's very little price movement. Now, the market could be trending higher or it could be trending lower, but it's staying within a very close space to its trend. And if you look on August 24th, which was only a few days ago, the VIX spiked way, way, way above its 10-day moving average. In fact, it got about 125% above its 10-day moving average. Well, the last time it got that high was actually the 1987 October 19th, Black Monday in October of 1987, where it absolutely went berserk and got almost 300% above its 10-day moving average. So the move over the last 7 days, ending on the 24th, was super, super violent. A lot of the violent movement happened inside the trading day, meaning it didn't close that low, but very, very violent move. So much so that it moved the VIX, which again measures the volatility of the price movement in the stock market. It moved its second farthest place away from its 10-day moving average. So it was a pretty violent move. And again, we don't know if it's over. I'm not saying it is. I'm not going gloom or doom. And we're going Dow to 5,000, gold to 400. I know there's a lot of newsletters and organizations that's how they drive their business, is to always be scaring people. But the best thing you can do is to invest your money, or 90% of your money, or all of your money, in a strategy that expects things to get pretty violent with price, because that's what's been going on the last 140 years. And that's what's happened over the last 7 days. And it has been very historic on many measurements. And it could very easily be done. That could have been it. A very scary, 4-day plunge with a 3-day correction. But we're still in the corrective mode. We're still in yellow light mode, which is still unstable mode. So there's still a lot of instability. And again, we could move out of it over the next few weeks, or it could move down. We don't know. And there's really no reason to predict. Just stick with, the strategy if you have market probability strategy. And you may want to find yourself finding a strategy, even if it's not the one that I call market probability, that I give complete access to in my membership site, but find one that is agnostic, right? Find one that expects things to go sideways emotionally and go down from a price point of view, because it's going to continue to happen, especially during one of these volatility periods that we've been in, which started in the year 2000, and they typically last about 17 and a half years. So what is the takeaway? And the takeaway, I think is pretty straightforward. You actually don't have to know what's going to happen next specifically, right? You don't have to know the future, but get a strategy that has looked at all the scenarios over the last 100 years. It looked to see what happened when John F. Kennedy was assassinated, when World War II started, when World War II ended, when the Battle of Guadalcanal happened. What did the stock market do? What happened when we had inflation or deflation or disinflation or stagflation? You want a strategy that can take all the data points and digest it and say, this is the direction. And it's not predicting, it's actually going with what's already happening. And that's one of the keys to any good strategy. You go with what's already happening. So you don't have to know what's going to happen, but you do want to have a strategy that does know that or has been there before. And really, guys, this is just, another step in helping you secure your portfolio and your future. Until next time, this is RC Peck. Hey, everybody, thanks for listening into my weekend podcast. I love sitting down and looking at the last week of price charts and really seeing like what's the most important thing, what's the thing that we can take away, and not just regurgitating what other people say, but really just looking straight to the price charts and listening to what they're telling us. And what they're telling us right now is we're in an unstable period and will be until we're not. And we don't know how long that unstable period will last. It will either move into red light mode or it will move into green light mode. If you notice parts of you have interest in wanting a super straightforward, simple, and transparent method or approach to protecting your money or growing your money, really simple step. You just reach out to us. You can contact Patty. You can just email Patty, really, Patty at Fearless Wealth, and say, I'm interested in really maybe having RC or his company manage my money or look into that, because I get how straightforward is the thing that works. You guys have a great weekend. It is super hot right now here in Silicon Valley. We have a busy weekend. We have 2 birthday parties. Good friends are coming into town, and then a pool party. So enjoy who you're with, and I will speak with you next week. You guys take care.